Today's guest on the podcast is the director of Ray White, Cairns City and Northern Beaches. They manage over 2,000 properties in the region, specialise in commercial property as well as residential. Welcome to the podcast, David Murphy.
Pleasure to be here, mate. Thank you for having me.
Thanks for coming on. For our audience that may not be familiar with you, maybe they live out of town, maybe they live under a rock, can you give us a quick overview of your career so far, I guess?
Career overview. So I guess I started out in property valuation. Wasn't born and bred here in Cairns. Came up here from Brisbane, went to school in Toowoomba. Went to university in Sydney, finished university, moved up here.
And what were you studying at university?
Bachelor of Property Economics.
Interesting. And do you still find yourself leaning back on that sort of study today?
Well, I used it for the start of my career. I was at Herron White as a property valuer there. I loved my time there. I guess I just didn't have that competition and as much passion as I do now for obviously the sales side. So I made the jump over in 2014 to the sales side. But mate, yeah, you're always going to lean on a property economics degree or the valuation background. I still use it every day, which is good.
It's one of those things. I guess it just becomes fundamental in your thought processes. And I heard something the other day, and it was essentially along the lines of when you become an expert in a field and you're in that field for a long length of time, 20 years or whatever it's been now, you start to forget how much you actually know. And like when we talk economics and economics degrees, I'm sure there's so much that you actually do from day to day and take notice of that many people just wouldn't have a clue what you're actually doing. Do you think that's true?
Yeah, I guess I'm very fortunate. There's so many stories of people going to university and not using their degree. I guess for me, the economics degree, it does help me out in a lot of my sort of field, but I guess it sort of helps me maybe see a little bit past the headlines and the trends that the average punter would look at, whether it's median sale price and vacancy rates. Sort of makes you look a little bit deeper, migration, business confidence, population growth, construction costs, those sorts of things. So you can start to paint a picture of what you think the economy will look like 3, 6, 12 months from now or even a couple of years. So I definitely lend on it a little bit in that space, delivering dialogue to my team and whatnot.
And I've noticed you've made a bit of a shift into the commercial space of late. You see you guys selling a lot more commercial real estate.
Yep.
Give us a little bit of insights into where you see that commercial space heading in Cairns and maybe even where some of the opportunities currently lie.
The commercial market at the moment, it's a very interesting landscape. So there's especially good class assets are really limited to the supply. But in terms of where I think it's going to head in the next sort of 12, 24 months, I think we've been in a really strong recovery over the last 4 or 5 years. And the market's performing exceptionally strong. So I think the affordable price bracket in the commercial space will outperform the upper end, as we've seen in the residential market. That's no secret. So opportunities in terms of where would I buy or what sort of asset classes would I be looking at?
Yeah.
For me, mate, the industrial sector has well outperformed, the office space and the retail.
I've got a couple of clients and really good friends of mine that have been trying to secure commercial like industry sheds at the moment for different trades.
Yeah.
And it's crazy how much interest and how quickly those are moving up in price. Like there was one particular commercial property that's in a strata title sort of complex, and I believe they were selling around that 300 mark not that long ago for sort of 100 square metre sheds, and I think the last one sold was somewhere around that 500 mark, and that was like in the space of like 8 months it had jumped up that much.
Yeah, it was nuts. Obviously, we sold one just by private treaty. Everyone says you can't auction commercial properties, but we had so much interest in these small little industrial sheds, anywhere between 80 square metres and 150. We took one to auction and we sold it for 477, 500. Yeah. And I think only 3 months prior, another agency sold one via private treaty. I think it was like mid-3s.
Yeah.
So it's just crazy. But that's the owner-occupier market. Obviously commercial assets all about what income the property can derive.
Yep.
That's how it's valued. But that sort of goes out the window when you've got small businesses. There's such a big pent-up demand and they're buying it in self-managed super funds and they want to owner-occupy.
I was having a look around because they were just trying to get some sort of idea if they were to lease it, what it would lease for. And there was next to nothing in that style of property actually available for lease. So that sort of, warehouse style around that 100 square metre mark, like just as rare as hen's teeth, and certainly looked like a pretty exciting position to be in.
Yeah, and I guess touching on going back to property valuation, sometimes having that as a past experience or a past job sometimes hinders my decision making a little bit, because I look at the rate per square metre for the small sheds and the large sheds. I think, well, it should be 225 to 250 a square metre.
Yeah.
And then by the time we lease them, they're 275, 280 a square metre, close to what like office space is. So yields at the moment that we're selling for are 4% yields, which no investor's going to buy.
No.
A 4% return.
No.
But yeah, so it's a good market to be in for sellers.
And I guess that, you alluded to that earlier, it is that sort of owner-occupier, small business owner utilising it for themselves that's driving that sort of lower end of the commercial space rather than like your traditional sort of commercial investor. Is that sort of fair?
Yeah, in the lower end, that affordable price bracket is all owner-occupier. Well, they're the ones that are going to pay a premium, right?
Yep.
Because there's an emotion attached to it as opposed to, similar to residential.
And he's had much to do in the retail space, so like shops in the CBD and that sort of space?
Yeah, look, that is starting to come back. That was dead there for quite some time. Obviously, once the Japanese left our market, a lot of those rents fell off a cliff.
Yep.
But they're starting to come back now. We've leased some properties that have been sitting there for quite some time. So then the confidence is coming back. You only see that as you start to walk around town. A lot of the shops are starting to fill up. But the biggest killer, mate, the same as the residential market, is the body corp fees in some of those buildings.
And traditionally for, say someone's looking to buy a retail space in the Cairns CBD, for instance, would the body corporates be charged back to the tenants in that case, or does it depend on the lease?
So you can charge back your administration fund, but you can't charge back the sinking fund.
Okay, that makes
retail
sense.
Properties. Yeah, so you can claim everything back. It's just that sinking fund. But when you look at retail complexes, your sinking fund is minute compared to your admin fund. When you start going into residential properties, your sinking fund can be,
For
same.
anyone not quite sure on those terms, what's the difference between an admin and a sinking fund?
So administration fund, that looks at collating all the funds to pay all the administrative costs of the building throughout the year, insurances, the whole kit and caboodle. Your sinking fund is for capital works of that property over the lifetime of it. So, your painting, your new roofs, those sorts of things.
So that's where, for a commercial tenant, I guess, your admin is an outgoing cost, is a cost of running the building, where your sinking fund is sort of somewhat an improvement, it's bringing improvements to the building. So that makes sense that it's structured that way.
Yeah, correct.
And what sort of returns, if someone is looking at buying into the commercial space as an actual investor, rather than, those owner-occupiers and small business owners that we spoke of, what sort of returns are on offer in that sort of retail space or the larger commercial properties in Cairns?
Well, it's all going to go on, I guess, the vacancy rates, right? The appetite for risk. If you're going to buy something where the vacancy rates typically they sit a bit longer, you can get higher returns there. So if you've got a tenant in your back pocket, you're going to get good returns. But look, office space is, trading somewhere around that 7 to 8%. Your industrial market at the moment, typically we wanted 6.5%. I've been selling some sheds at the moment now into the low 5s, which is just astronomical for me as an investor.
Yep.
I'm not going to buy those. Unless I think they're under rented and market value, then I'm starting to look to see what I can do when those market reviews or rents come up.
And is that a bit like when you've got sort of a residential area that has a high sort of owner-occupier appeal? Typically your rental yields become lower in those areas. So, what comes to mind is like your Edge Hill, your Whitfield, those areas, and even your higher price points in Cairns. Once you go north of that sort of $1 million mark in residential market, your rental yields really start to fall off a cliff. And I guess that's similar case in the commercial when it has that owner-occupier appeal.
Yeah, correct. It's the exact same. But I guess your owner-occupiers are probably in your more affordable price bracket, your small business, because can afford, premises between 500,000 and maybe a couple of million. As soon as you start to go to large national tenants, large assets where it's going to be national tenants occupying it, everything there is, management funds. It's all derived purely off the return the property's going to get.
That makes sense, and they're probably looking at a much larger scope than they're considering Cairns, but they're probably also equally looking at Townsville, Sunshine Coast, Victoria at a much more national scale for those larger investment funds.
Yeah, 100%. Yeah.
And you guys at Ray White have a pretty huge sales team, which gives you guys some interesting insights into where the market's heading. What are you seeing on the ground, and where do you think we might be heading coming into 2026?
Well, mate, I think the momentum is certainly going to continue to 2026. The back end of last year, I could feel a little bit of a lag in the market. Everyone was a little bit tired, didn't have the momentum, but like across our whole Ray White network, it just feels like there's energy and there's momentum still behind us. It's all got wind in the sails. So look, I can't see it slowing down at all in the residential or the commercial sector, from the onset. But look, no one has that crystal ball on what it's going to look like. But I still think the affordable price bracket and the owner-occupier properties, especially where areas are scarce, like land scarce, city fringe, CBD, Portsmouth, Bungalow, Smithfield, there's absolutely nothing out that way. Those sort of pockets, regional little areas, I think are going to perform exceptionally well. But I think that the affordable price bracket is what's going to see the biggest percentage growth.
And it's funny when you talk affordable price bracket, it wasn't that long ago that we're seeing properties sell, houses sell for $300,000 in Cairns. When I was selling real estate a little bit ago now, but I was literally selling ex-government housing properties for $240,000, like freehold houses on 400 or 500 square metres. What would you now consider the affordable price point for a house?
Oh man, I feel like everything's unaffordable at the moment now. But I touching on, I seen one of your podcasts where you talked about everyone was giving you shit about buying units. Back in the day.
Very much so.
Mate, I was in the same boat. I was just looking at the replacement costs. I'm like, these have to kick.
Yeah, no chance.
But so what was your question?
Affordable price point. So I guess now break it down to even like apartments and houses. So if you were wanting to get into the housing market, buy something in Cairns that's entry level, like not a fancy house, but just entry level house. What are we sort of looking at in today's market?
If you can get anything under that 650, you're doing exceptionally well.
Yep.
Just depends on where you want to be. But if you can buy a house at the moment now between 550 and 700,000, but that's where all the competition is as well. Obviously, the new LMI scheme that's come out, which is completely counterintuitive. They've done something to try and bring people into the market early. All they've done is just put prices up. You can see how many properties at the moment now that we're speaking to, and they're speaking to the broker and they're going through that LMI scheme. So it's putting so much pressure in that affordable price bracket. So I think you're going to be hard pressed to find a house in Cairns under 700,000 in 12 months' time. So if you can buy something now, 650, 675, needs a bit of work, capital work's done to it, you're going to get some really, really good returns, I think, in that space. Completely agree.
And even, you touched on it with the apartments being sort of below replacement cost. We're still seeing that today, apartments, entry-level apartments now 400,000 to 500,000 in Cairns.
Yep.
And I've spoken to quite a few developers on this podcast, and everyone really starts to look at that sort of $1 million mark for high-rise apartments. And when I say high-rise, like 3 levels or more, this really seems to be a very slim profit margins, even around that $1 million mark for a 2-bed, 2-bath apartment. So it's going to be interesting to see the upwards pressure on those apartment prices even into the future.
Yeah, I've done a couple of feasibility reports for some developers looking to do stuff here in Cairns, and you even stretch you try and be optimistic in the pricing structure, but you still can't get it to stack up. You just look at it and think, they're not going to give me the business because I'm going to be honest. It's going to be well below where they need it to be to get their 20-30% margins. But construction costs are just astronomical. It's going to be quite some time before you see really good profit margins in the construction space here.
And do you agree with that sort of $1 million for like a 100 square metre apartment? Is that sort of in line with sort of what you would...
If you're building brand new now, by the time you go and buy land, especially if in the CBD, probably you could still get a good return sort of sub $1 million. Like 100 square metre apartment in Cairns, if you're going to be spending $1 million, you're going to want larger than 100 square metres.
Yeah, correct.
Yeah, unless you've got ocean views, that's completely different.
And that for me creates a real, I guess, a floor on prices. Like prices need to keep rising until we get to that level that new supply can come to market.
Yeah.
And while we're below replacement cost, there's no new supply coming for apartments anyway.
Yeah, and I'm seeing the same in the industrial space. Like there's some really good blocks of land coming up for sale now, but the people that are buying them are owner-occupiers building purposely for themselves. Yep. When you're looking to try and do a development, you're still spending $2,000 a square metre just to build a concrete tilt slab shed. So, mate, it is astronomical. You've got to sell a 100 square metre industrial shed at, say, $600,000 now to get those good returns when you can already go buy established for $450,000, $500,000. So it just doesn't stack up. Yeah.
And then I guess, the other challenge to that, Cairns, I've spoken about it before, but Cairns is landlocked. You've got the mountain ranges behind us, the ocean on the other side, and cane farms to the south. So that also adds added pressure to everything. The fact that we can't continue sprawling. It's not like Townsville or Melbourne where you've got this never-ending amount of land around you.
Yeah, and that's why I say pockets, like our town planning in the city is quite poor. Like they haven't allowed for anywhere near the commercial zone space that we need. So if you're buying in those pockets, Portsmouth, Bungalow, or as soon as you move to that northern corridor, because it's landlocked, the scarcity is only going to push prices one direction. Like the amount of buyers we have coming to us saying, hey, look, I'm looking for industrial office space in Smithfield, Trinity Park. You're like, mate, if I find that, I'll be buying it myself.
Yeah.
Because it's just so scarce at the moment. There's been a few come to market, but they've been snapped up straight away.
And heading into next year, what would be what would be some indicators or sort of reasons to start being skeptical of the market? I guess, you know, everyone at the moment feels like the market's on a tear, it's doing extremely well. What would be some early indicators that you would keep an eye out for that might be the first signs that maybe the market is starting to slow down?
Well, mate, I'll probably be speaking a little bit over my pay grade here, but if you look at migration, if you look at construction costs, the pressure on the rental market, I can't see anything inside the property sphere that's going to put downward pressure on property prices. Interest rates, if they jack those up astronomically, but if they do that, it's only going to stop supply coming to the market because it's construction costs, holding costs. So it's counterintuitive. I don't know how they're going to balance that with the interest rate, but I guess it's things outside of our control, like obviously foreign policy, Donald Trump, if he goes on some rampage again.
Donald Trump going on a rampage? What? No chance.
Yeah, like tariffs, those sorts of things, or another pandemic. They're things that are outside your control, and you have no idea, how the market's going to respond to those.
Yeah.
But if you're looking at the key metrics that economists look at, mate, there's nothing that's pointing in the direction that we need to be, conservative in our view.
No, that makes complete sense. And if you were going out to the market to buy something for yourself, coming into next year, what would be that asset? What location, what sort of property, what would you be looking for if you're in the market to buy yourself?
Well, for me, I guess for the average punter, I'd be looking in the industrial space, but I can see some really good opportunities for people in the office space, in the small office space in the CBD. I can see that starting to come back, especially if you've got office space that's got adequate parking. There's nothing. I'm sure you go out for dinner, mate, or you go to work in the city. Parking is the biggest issue. If you can get things that's got adequate parking, it may be vacant, may be sitting there for quite some time because it needs a bit of capital expenditure in terms of a fit out. If you can do that, have the holding costs, I think you can make some really good money in the office space at the moment. Retail, I just don't see. I don't have as much confidence in that space. Yep. But if I was entering the commercial market, I'm looking for something that is as safe as houses, I'd be going that industrial sector, and I'd be trying to go city fringe CBD or anywhere north. Which
makes a lot of sense, especially, going back to it, the land supply and the actual approved land usage for that sort of stuff is so limited in Cairns.
But I could be wrong, mate. I look at property prices for Edmonton. A 4-bed 2-bath is the same as a 4-bed 2-bath in Trinity Beach, and I go.
And that's an interesting.
So it could be the same for the commercial properties.
When you look at that, and you look at Trinity Park being worth similar prices to Edmonton, what do you feel has actually driven that? Because that makes no sense to me.
I don't know, man. We might have a fair few Edmonton listeners here, but look, if I'm buying a house...
It's nothing against Edmonton, it's just...
I love the Southern Corridor. There's no logical reason for it. I guess, look, I've heard so many buyers agents, and you might have been some conferences where they've talked about the Southern Corridor for Cairns having really great growth, really strong rental yields. We're seeing so much interest from down south in that Southern Corridor, where normally it was always Palm Cove, Clifton Beach, those sorts of suburbs that attracted all that southern interest, where it's flipped. Yeah. So a lot of the people that are paying big money for the properties in the Southern Corridor aren't locals.
Yeah.
So they probably don't know the sort of little micro markets in Cairns as well as we do. But if I could buy the exact same product in Edmonton or Trinity Beach, I'm buying Trinity Beach.
Completely agree. The other interesting one I've found at the moment is Manunda versus Cairns North. And I own a fair bit of property in Manunda, so I'm not a bit biased, but Cairns North should be worth way more than Manunda. Yeah. And the price difference is pretty much on par for like properties, which it's just an interesting one as well. Just little indifferences that go against, I guess, the historical averages for Cairns.
Cairns is probably one of the hardest markets, and that's probably why buyers are becoming so prevalent now, because there's so many little sub-markets everywhere. Yep. You can go in Cairns North, and Cairns North is a great suburb. It's had unbelievable growth, but there's some tiny little pockets of units that probably bring that median down 100%. So as long as you're not buying in those pockets, the data's a bit skewed. But for me, I'd still rather be Cairns North than Manunda. But look, mate, I've got a lot of units in Manunda too, so I'm a bit biased too. So if everyone wants to jump on and buy in Manunda, it'll help us both out.
Yeah, that sounds good to me. And I've noticed you guys are starting to take more and more properties to auction.
Yeah.
Now, for buyers listening to this, people that are looking at buying at auction, what's a couple of quick tips that you could give people just so that they stand the best chance of actually securing a property at auction? Or that, they might be a little bit concerned about that whole auction process, I guess.
Yeah, and I think, if you're not familiar with the auction process, it can be quite daunting because you just hear it's a cash unconditional sale, you might lose your deposit if it doesn't stack up, all those sorts of things. But the better you can be prepared for an auction, the better chance you're going to put your best foot forward to secure it. You know, I think for me as a buyer, if I'm going to a market where I don't know, if I'm going to Brisbane, Sydney, Melbourne, I'm not familiar with those areas, I'd want to buy at auction because I'm not at the mercy of the agent telling me what the feedback is, the agent giving me, you know, skewed comparable sales, trying to influence my opinion. I can go there and open forum. I can see where all the competition is. I know where the other bidders are at. So for me, I think our auction's the most transparent way to sell real estate. That's why that's the vehicle in which our business is heading. We still sell a lot of properties via private treaty, but I think for tips being ready for auction, have a budget and stick to it and know what you can afford. You know, what you can borrow and what you can afford are two very different things.
Yes.
But going to a broker that knows the auction process is the most important thing. Yep. There's nothing more frustrating when a buyer goes to a broker, the broker says, oh, don't bid at auction, you don't have your formal pre-approval, or what if the valuation doesn't come in? Like a broker can do the comparable sales and see if the house is worth 600, if it's worth 650, 700. They know what they can bid up to.
In your valuation career, or even as your real estate career, how often have you seen a property not value after it's gone to auction?
I've never sold a property at auction that didn't value up. And I've never, as a valuer, seen a valuer crash a property at auction.
And I guess that's a logical thing. A valuer is trying to identify what the market price is for a property. If a property's gone to auction and multiple people have seen value at basically where it ended up, like most of the auctions that I see, we end up at a $500 interval, or maybe $1,000, or maybe even $5,000 final bids. It's not like the buyer that pays the most money for the property has paid an extra 50, 60 or 100,000 for the property.
Yeah, correct. Like when we sell a property by a private treaty and it's a phenomenal price, the valuers will call us and say, oh, is the buyer local, or yes, how many other offers? They start fishing because they're like, well, this seems above market, and they're probably a lot more concerned and probably a bit more wary. If I stack this up, maybe this can come back to bite me. But if it's at auction, there's 3 or 4 registered bidders. They can see, like, our bidding online is live. They can go back and watch the video. They can see the bid, each buyer's bids. They can see that's an arm's length transaction. It's fair market value. Value is more likely to, in my opinion, to stack that up. So.
No, makes a lot of sense. And I think the transparency thing's a big one as well. I speak to a lot of frustrated buyers that have got involved in multiple offer situations, and the legislation's somewhat a grey area, but somewhat it's not. It's legally, I believe agents can't disclose the price when it's a private sale.
Yeah.
I think there's always a little bit of hinting and nudging and somewhat guidance there, but it's not transparent. You are trying to take the agent's word for it, and it can make buying really frustrating in Queensland when you actually don't know where the other bidders are and where the other people trying to buy the property are. So I think that's a big tick for auction, and for buyers looking to buy at auction is you do get that level of transparency that you actually know where the other buyers are. And then on the flip side, for people looking at selling in this market, there's probably some clear advantages to going to auction.
Well, yeah, I guess it's the same on the flip side. It's transparent for the buyers, and they can actually see all the competition. So there's no smoke and mirrors, and don't have to worry about a multiple offer situation, agents not getting back to them. But then I guess on the seller side, we want to try and create an atmosphere, we want to try emotion, a competition, and all those sorts of things. When we can create competition, it does phenomenal things to the price. So that's the method we choose to get the best price for the sellers. But the biggest thing is it does force buyers to do their due diligence prior to the day. They have to get their finance sorted. We try and provide a building and pest for them, so they don't have to spend money not knowing whether they're going to secure it. But once that hammer falls for the sellers, it's just absolute certainty. There's nothing worse, because it's cash unconditional, money's in the bank, 30, 60, whatever the settlement time frame is. There's nothing worse in this market. You do a multiple offer situation with 4 or 5 buyers. One buyer hasn't even spoke to their brokers, telling you lies, doing an LMI scheme, trying to overreach. They're not going to get their finance. We put it under contract because they haven't told us the full picture. We haven't been able to get it out of them. Come day 21, they fall over in finance. We're going back to the drawing board. So our job as agents is to try and give homeowners certainty. So we want to give them cash unconditional offers.
That makes complete sense. My only sort of question, I guess, is for buyers that are first home buyers that are accessing that 5% deposit scheme at the moment, does that essentially rule them out at buying at auction?
No, not at all. So I guess I was speaking to Gordon. He runs our loan market arm to our business, because we've had that come up with a lot of brokers saying, hey, look, you're doing the LMI scheme, don't bid at auction. All it means is it's going to take a little bit longer time frame for them to get their finance fully pre-approved. So you can speak to the agent and say, hey, look, the time frame at the moment for the contract for sale is 30 days. Can we push that out to 60 to give me some breathing room? if the broker's got some concerns whether you're eligible for that LMI scheme, then I'd certainly say, hey, look, don't come to auction. If there's
What about in terms of actual deposits? Because at the full of the hammer, it's typically a 10% deposit.
Yeah, depending on the price point. Again, we allow consideration for certain buyers. If it's $1 million property, sometimes we'll allow $20,000, $30,000, $50,000 deposit. Okay. But if there's a certain reason why you can't bid, you can go to the agent and say, hey, look, I've got money tied up in X, I've got this. Can I be afforded a $15,000 or $20,000 deposit at the fall of the hammer? And then after 7-10 business days or whatever it may be, I'll pay the remaining 8% or whatever the deposit is. We always allow considerations to get people in a position to bid. That
makes a lot of sense, just that little bit of flexibility, because everyone's situation is so different.
Yeah. Well, mate, we want everyone there bidding. The more competition we get, the better price for the sellers. But there's nothing. That's why we want to take properties to auction, because we want to try and give buyers every opportunity to secure a home. You're a buyer's agent. When I come to you and say, hey, mate, it's multiple offer situation, put your best foot forward.
It can be a very frustrating position, and you especially like in the market at the moment, you can be looking at comparables, and I think where people often get confused and lost with comparables is they're looking at a comparable from a property that settled 3 months ago, but it actually might have went to contract 2 months prior to that. So they're looking at a comparable that looks like it's 3 months old, but in reality it's a 5-month-old sale.
Yeah.
And in that 5 months, the market might have rose 10% at the moment. Like current growth rate in Cairns is sitting around that 16-17% growth rate. So, a 6-month-old sale could be, on $1 million, could be 60 or 70 grand less.
Yeah, exactly. So that just proves the point as to why we're sort of going that route. But, we hear all the time in the marketplace. It's actually been the first time in probably the last 12 months where buyers have now picked up the benefits to them. They're coming to us saying, we're actually so glad this is going to auction because I know I have a chance to buy it.
Yeah.
Where they've had, I called such and such agent, I went through the open home. By the time they got back to me, the property was sold. So do little things like that, especially if they've gone and done due diligence, they've spent money on building pests, whatever they've done to try and make an offer, and then they don't get afforded the opportunity. Like that would make me frustrated.
100%.
Yeah.
And I have a little tradition on this podcast for the final question, is advice you'd give to 18-year-old you. So 18-year-old you, you're living in Brisbane?
18 years old, where was I then?
Playing rugby?
Yeah, I would have been either Brisbane or Sydney. Yeah, it's Brisbane, I think, yeah.
What advice would you give to yourself?
Oh, geez. I don't know so much about 18, but I guess sort of when I finished uni, probably the biggest bit of advice I'd give myself is to back my decision making as opposed to, taking more risk. Because I used to look at a project or a business or a property and think, oh, well, if someone else hasn't purchased that yet, or if someone else hasn't moved on this, maybe they're seeing something that I'm not. So then I'd lose that first mover advantage, or I'd buy something a little bit later. So I think for me, it'd be taking more risk and just backing my own decision. And then probably the second thing would be running towards mentorship.
Yep.
Like trying to find your mentors early on. If someone's been there, done that, been in the trenches, they can save you so many months, years of trial and error. And I think I've been so blessed with the Ray White network that I've got some really bright minds and also people locally that have helped me in business and personal life. So I would take more risk and run towards mentorship.
Love that. Mate, been an absolute pleasure having you on.
Thank you.
Thanks for joining me.
Thank you for having me.